I recently hosted a live workshop with my friend Mitchell Baldridge on the tax advantages of real estate. We cover bonus depreciation, cost segregation, 1031 exchanges, all the different ways that real estate and all the different things that make real estate the most tax efficient business in the world. So if you want to learn more about Mitchell and what he does, visit recostseg.com. And here is a replay of the workshop that we hosted a few weeks ago. Thanks for listening. The 5 levers of bonus depreciation, Mitchell. Let's walk through this a little bit. So these are basically the levers that you can pull or that you look at to figure out how much savings you could potentially get.
That's right.
Deferral you could potentially get.
It's savings for now. It's deferral later. But yes, yeah. So this is how we think about it. And you just said, hey, everyone's asking, how do I know what works for my building out there? And this is how we know. And this is how we think about a deal when it comes in the door. And we get a lot of this. So let's go back to this $1.5 million warehouse that we're talking about. So lever one is, what is the land value and what is the improvement value? The best way to calculate that value is by the county appraiser. They're this kind of neutral third party. So when you go to the county's website and they have your property appraisal, we look at the land value versus we look at the improvement value per their records. So, a shack in Manhattan versus, a huge warehouse in a cornfield in the middle of nowhere, one would have a lot of land value. One would have,
and land value is bad. So if you're in an area like Manhattan or you're in Southern California where land is very valuable, that lever is lower. It's a higher percentage of the value is land, and you're going to get less bonus depreciation. Like buying a duplex in rural America is going to have a higher percentage of depreciation than buying a crappy duplex in Washington, D.C. because the land value is higher in D.C. So that's kind of a way to think about that first lever.
Yeah, because look, if you can't, if you can go buy a brick house with a 3-car garage for $350,000, it's a whole different deal than when you go into Southern California and you get nothing for millions of dollars.
There's a lot of questions. There's a lot of questions coming.
Sure.
Can I cost seg a condo? Can I cost seg a garage? Is it short-term rentals or long-term rentals as well? The answer is, if it is a for-profit piece of real estate, you can be eligible for bonus depreciation, and you can do a cost segregation study. So if it's a for-profit, if you own a condo, a beach house, a short-term rental, a long-term rental, anything that you're trying to make money on, also a warehouse that your business could be in.
Yeah.
These are the areas where bonus depreciation starts to thrive.
We've cost seg, $200,000 small rent houses, and we've done $200 million portfolios of office buildings. So, kind of everything in the middle, real property is available for this. And again, you go to recostseg.com, you fill out the proposal. We tell you exactly what you kind of might return within the kind of range bound for this. So
let's rip through these other. Let's rip through some of these other levers. So, and I'll kind of do my best to talk through them. You can add anything that might be necessary here. So, number 2 is the percentage of the property with useful life, 15 years and under. That's stuff that's not, doesn't have a full 39-year depreciable lifespan. The appliances, the windows, the landscaping, the sidewalks, the garage doors, any movable walls that you have, all that stuff. More of that means more depreciation. Lever 3 is the amount of money that the bank gives you, because the bank is going to amplify your yield. The bank doesn't take any of the depreciation. So if they give you half the money and they don't get any of the depreciation, it effectively doubles the percentage of depreciation that you'd get if you bought a property with cash. Now, since debt is more expensive, that lever is working against us right now, since we can use less leverage to buy real estate generally.
Sure.
Now, lever 4 that you look at is, what's my tax rate? If I'm in a really low tax rate, I'm not claiming a lot of income, a cost segregation study, a lot of bonus depreciation, that's not going to help me necessarily. But if I'm buying real estate in Manhattan and I'm in a 51% tax bracket, the returns of a bonus depreciation amount are going to be higher. And then lever 5 is the year that you're doing this stuff. And is it 2024 where you're at 60%? Is it 2025 where you're at 40% and it's going to phase out? But the bonus allowable percentage also really matters.
Yeah. So, percentage of leverage, if you put $1 down and get the building and you have $1 in, your payback ratio is going to be almost infinite relative to that aspect of it versus if you put $100,000 or if you put 100% cash down, it certainly mutes your returns here. And then, yeah, this whole thing is an arbitrage on tax rate, meaning what is my tax rate today and what will it be in the future if and when I sell this? And then it's an arbitrage just on being able to use the money over time. Because again, this is a deferral. You're going to owe it back to the government one day, but there's no sense in doing this while you're in an 18% tax bracket and then paying it back at 51, right?
Yep. Let's do this case study later. There's a couple case studies here of ones that we've done just as an example. I guess we can just touch on the highlights here is that a self-storage warehouse, 22% of the purchase price was eligible for bonus depreciation. 22%. That's because their self-storage has a lot of movable walls. It has a lot of underground retention. It has a lot of earthwork. So 22% of the purchase price on, actually, this is one of the buildings that I bought, was eligible for bonus depreciation. An industrial portfolio, they're not movable walls. There's a little bit more land value potentially as well. So it's a 10.7% percentage of, and we got a question up here, what asset class is the best mix of potential bonus depreciation? So we're going to run through a couple of these. Industrial building, 10.7%. A short-term rental, what was the percentage of purchase price? This one actually doesn't have it listed.
It was, 222 divided by 550. So, I mean, that was close.
Almost 50%.
Yeah.
46% of it.
That last lever, that lever number 6, is really the payback ratio, which is what are you going to pay today for us to do this study and for you to deal with it versus what immediate savings are you going to get today? I mean, that's a huge factor. And you can see where they paid $2,800 for $663,000 of immediate. And that's net. That means that's what they got in addition to what they were already going to get.
Big news, guys. I created a free PDF that details my method on how I analyze a self-storage facility and figure out what it's worth. Give me a pen, the back of a napkin, and a couple metrics, and I can figure out about what the property is going to be worth to me. If you want to download this PDF, click in the show notes, the first link, and you can give me your email address and you get a email right away with 4-page PDF that outlines exactly how I think about underwriting or giving my initial analysis on a self-storage facility. Again, click the link in the show notes and you're going to get that document for free. This episode of The Nick Huber Show is brought to you by RE CostSeg. If you want to maximize your bonus depreciation and minimize your tax liability, make sure to do a cost segregation study on real estate you've recently acquired. RE CostSeg offers the lowest priced, fully engineered studies in the business, and you get a virtual site visit with a quick turnaround. They did 30 plus cost seg studies for me over the past year, including a short-term rental, along with my self-storage facilities. And I'm also an investor in the business, along with my good friend and CPA, Mitchell Baldridge, who you all know. To learn more about how bonus depreciation works, listen to episode 75 of The Nick Huber Show, or visit recostseg.com to go ahead and get a free proposal that outlines the cost of the study and your potential savings. Thanks again, recostseg.com.